You can choose to have a little bit more of a fear-based and caution, or you could see it as a potential learning opportunity environment that we don't understand as well. So we're going to be very careful. We're going to talk about it. We're going to work our way through it, but we're going to choose to be open-minded and growth mindset kind of energy of like, let me just figure this out together, because I think that it's just going to make us such stronger traders down the line for having this experience and just constantly staying present and motivated to learn and always listening to what the market is showing us and then taking in new data and adjusting our system. And that's been a really powerful part for me is, never feeling satisfied with what I know and knowing that I'm going to be a lifelong learner from this market. Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today. Hey guys! As you all know, my good friend Peter here and I are both in the same trading community and have really bonded over the last few years as evolving day traders. We've learned to see the market fairly similarly and have cultivated a strong friendship that really has been like a safe space for us to work through the emotional and psychological growth requirements together as we're both like learning all the technicals and how to become profitable traders kind of alongside each other in our journeys. So the other day, we were actually talking about trading, of course, and decided that it was time to get another episode on record for you guys. So I'm quite pleased to be welcoming back my friend as a guest again for part 3 of our day trading conversations, my friend and confidant, Peter Koo.
Hey, Becky. Thank you for having me. Market Mamas. Always a pleasure to be here.
Thank you. I mean, Peter is definitely a day trader, but his non-trading work is as an attorney, actually, who specializes in intellectual property law, commercial transactions, and corporate law. And he's currently the executive vice president and general counsel of Excel Health, Inc., which is a healthcare provider out of Washington. So Peter, he's been a guest on this podcast a few times so far this year. If you guys missed any of those episodes, you're definitely going to want to go back and catch up on them because it's really been quite fun, our conversations. And quite frankly, Peter and I can and have talked for many, many hours on all things trading. So it's only natural that we're just going to have multiple episodes to kind of cover it all and bring out topics that I think are really valuable, that bring us value, right? So anyways, that's why we're coming at you guys again. So right now it's the end of April when we're recording this, 2025. And we've had a bit of a happening in the United States of America this year with a changing of our presidency. And kind of in line with that has been some uptick in volatility. And, who knows? There's catalysts always. The stock market has had major swings through its inception. And right now we're definitely seeing some increased volatility. And so we kind of wanted to talk a little bit about how we personally are managing our risk during these volatile times. Peter, why don't you start with that?
Yeah, thanks, Becky. It's a germane question, right, for the times that we are living in. And people have asked me, how do you handle the fact that a random tweet could come out at any moment of the day and it could move the markets, several hundred points, right? And, I'm not making a political statement or a judgment, but this type of volatility in the market is unusual. Now, day traders that like us, me, Becky, we thrive on volatility. So the worst markets for us are where there's no volatility and the market, moves sideways in a narrow range, right? And you and I found those types of markets to be very frustrating for all kinds of reasons. This is kind of the polar opposite of that. It's a little bit too much, right? And so what we have learned and what we have developed for ourselves are just how to manage that. And the one thing I think for all of us, most of us at least, is, in this type of volatility, we have to scale way down in terms of leverage, right? At a time when, let's say, on the Dow, we both trade the Dow Dow Industrial Futures, and the symbol is \YM. A point on the Dow is $5, right? And that's trading what we call minis. So a mini Dow, 1 point on the mini Dow is $5. And so, I would say, Becky, in a normal environment, you and I would be trading, we'd be going into a trade with one or two contracts, right? And I don't really scale up that much, but you can. But that's okay, because even if the trade turns against us, right, in a normal market, like that's we can manage that. And when you look at like 5-minute candles that are 100, 200 points, like that's just, Becky, that's just, for us, that's just way too much risk, right? So I think most of us have started trading something called the micros, right? And the micro is basically 1/10 of the mini. Okay. And so like I trade 5 micros, which is basically a half a mini. And so basically 1 point in the Dow Industrial Futures, right? It's no longer $5, it's $2.50. Okay. But I can then place my stop loss at a reasonable place and, let the market do what it needs to do, right? In order for me for the setups that make sense to me to work out, right? Now, if I traded the minis, we don't want to be going in with one trade with $1,000 risk, right? As we spoke about last time, we always want to have a multiple on our risk reward, right? So if we're risking $1, we want to at least make $1, if not 2 or 3, right? And not the other way around. And so if we don't scale down, I think it's very hard for the risk reward, equation to work out, in a way that makes sense for us as traders. What have you been doing, Becky?
Yeah. I think especially earlier this month, I mean, it was madness, because one candle, like you said, instead of where it used to be maybe 50 to 70 points, and that would be, we would enter based on how a candle would close, what direction it was pointing. And then often our trade plan would consist of hiding behind the bottom of that candle or the top of that candle.
Right.
And so when the candles are massive or the wicks are huge, it really changed things, because you did, our mentor Jermaine likes to call it a liquidity donation.
Yeah.
When you squeeze your trades, if you put your stop too close to your entry and it's still messing around before it really takes off, I mean, that's essentially you're holding a trade too tightly, and it's just going to wick you out when your trade plan could be solid and it could go directly to your target after messing around just a little bit more. And so we wanted to be able to still trade, but not just be a donation of stops by keeping it, I'm only willing to risk $250 total in order to trade. Well, we just couldn't anymore. I have found that, I would just get wicked right out if I tried to squeeze it too tight. So for me, I did similar. I downsized, and I had gotten to a place where I was pretty consistently almost always trading 2 minis, where I would get in for one, and then I would let it move a little bit. And then if it showed me confirmations that my trade plan was really working out, that's when I would add the second one. It would shift my average entry price. And then I would scale out one out at the first or second target, and then one out at a farther target. And so I found I was like that, like you said, 2 contracts, double the risk. I just didn't have the space for that in my account sizes that I was trading, which is the 50K account size with a couple different funding companies. So I had to go down to 1, and I debated hard on the micros, but I decided I was just going to, instead of going to micros, what I did is I just did 1, and I tried to really narrow in my entry price. And I was trading, I think, super cautiously, which actually kind of helped me, because I think sometimes I was a little more liberal than I needed to be with my entries before. But I did downsize half size for like almost 2 weeks when it was really volatile with all that, like Liberation Day and and now I'm dabbling back in, but that was a hard transition too, because that had to make me change my style, because I really, really like scaling out, because that basically locks in a good amount of green. And then even my scales, like if that was the only P&L I got for the day, it would be enough to really matter, because it's copied across multiple accounts. And so not having one to scale out, it's like, shoot, do I go out at a lower target, or do I try and hold farther and then potentially give back a bunch? So it just has posed quite a few challenges, to be honest, this volatility. But I did downsize to 1, and then I just ended up oftentimes just picking a lower to medium target and taking even smaller wins in order to still trade, because I felt like I still wanted to study and learn from the market and execute and get practice. And I think for me, I learn by doing. And so by having to trade in the market, I learned so much more than studying, because there's skin in the game. My heart rate goes up a little bit. I have to manage it actively. So I did choose to still trade during the volatile market. And I do know traders that abstained when those wild moves were happening, which is also a choice, like that is, you don't lose if you're on cash or you're just pausing. So I decided to leverage down and trade. And now it's like leveled off a little bit in the last week. So I'm back to trading 2 minis most of the time, but not, like eyes wide open kind of energy, because it really can be one random bit of information that no one is expecting. It's not on Forex anymore. Like sometimes Forex will have an announcement, 30 minutes into market open, and it will do almost nothing. And then randomly the market will explode later. And you're like, what the heck? It was some random tweet. So it's so inconsistent, but we're working through it.
It is. I think what we've been seeing a lot lately too are algorithms, right? Coming up. There seems to be a lot of stop loss hunting with these wicks. And, I think it's one of the things that Jermaine has told us as well, which means, what that means for me at least is considerably less time on the charts, right? So another way that, this volatility that I've been able to manage was when I do it, I don't always do it, is, Becky, stepping away has been really, really powerful, and, as about a month ago, we unfortunately had to put down our dog. And, Goji, our dog, was kind of she was a forcing function for stepping away, right? Because when she wanted to be walked, she wanted to be walked. And when she wanted to be fed, she wanted to be fed. So it's not like, we, I could say, hey, wait an hour, kid, And so that forced me in some ways to get off the charts, go and take care of her. And I miss her very much, but it was, I don't have that anymore.
Yeah.
Yeah. So good. Well, thank you. That was that's what, and I like, what I've said, I think makes a lot of sense. I need to be better at doing it myself, and, I think that's part of our journey. And one of the more interesting things about this market right now is that, it's a really good, prism into the world of trading, right? Because what you and I do now to manage this, well, the markets are, very likely are going to be different, in 3 months, 6 months, or a year, right? And so we kind of have an evolution as traders, right? It's one of the things that makes trading so interesting is that whatever we're doing now, it's going to have to evolve because the markets are going to change. And then if we don't evolve, with it, the good thing about having a really powerful trading community, powerful and supportive trading community, is that we do that, right? And our mentor, kind of helps us do a lot of the things that we didn't, like the drop rally-based rally kind of stuff. We didn't look at that very carefully a year and a half ago. The 5-minute opening bell strategy, which Jermaine developed, was not something that we did a year and a half ago, right? Looking at the volume bars was not something we did a year and a half ago, right? So these are all things that, has been part of our evolution, and, part of the things that we have learned. Right?
Well, and I think that makes us all such healthy traders, because there's no stagnation at all in what we're doing. And that's why, like, even you and I have had many payouts, but we are not backing off at all with our mentor and our active trading community, because there's no part of us that is saying we know everything we need to know to be profitable at this point. It's like, tell me more, study more. Let's all ask questions. Let's learn together. Let's see how this works and see what it looks like on the chart so we can keep growing. And with this current market condition being more volatile and more irregular, it's just, you can choose to see that however you will. You can choose to have a little bit more of a fear base and caution, or you could see it as a potential learning opportunity environment that we don't understand as well. So we're going to be very careful. We're going to talk about it. We're going to work our way through it, but we're going to choose to be open-minded and growth mindset kind of energy of like, let me just figure this out together, because I think that it's just going to make us such stronger traders down the line for having this experience and just constantly staying present and motivated to learn and always listening to what the market is showing us and then taking in new data and adjusting our system. And that's been a really powerful part for me, is, never feeling satisfied with what I know and knowing that I'm going to be a lifelong learner from this market and the people that I choose to have around me, and how powerful that has been.
Right. And it's also, in terms of this volatility managing risk, it's also, repeat the line from that, that really successful trader Tom Hugard, right? Like it said, the book is Best Loser Wins, which you have reviewed on this Market Mama's channel. But it's a good saying because, with the volatility that we're experiencing, we're like, boy, it's one of the things that we have to get very, very, I've had to teach myself to be a good loser. We aren't born that way. It's one of the hardest things as a trader, right? Is one, managing risk, managing greed, and then being a good loser, right?
And that was the other thing I wanted to say about the volatility and risk management is that I actually have improved on that as well, just in this last month, even because, I do, when I get into my entry, I will put my stop loss where it needs to be while I'm waiting for the confirmations and for it to start taking off.
Right.
But once it starts taking off and it breaks a level, like even just a one candle level in the direction that I'm heading, I have gotten so much better at keeping it tighter because it's more unpredictable. And so as it starts to move in my direction, I will start snugging up my stop loss. And previously, sometimes I like to let it breathe and just get there, or at least scale out the one. I still prefer for it to scale out the one before I tighten. But I just have had to respect the fact that I might just need to take a couple of smaller losses and respect that risk because heaven forbid, I'm 100 points in profit and then it slams down and I end up 100 points red because I didn't snug it up. And instead of taking 100 points profit, I took 20 points profit. Which of those would I prefer? Like, obviously, I'd rather have locked in the 100, but if something happened very rapidly that I didn't anticipate, I'd rather take the 20 versus the red. So it's been an adjustment too, to like really pay a lot of due respect to being careful with it and not recognizing that every time you have an open trade, you are exposed to the market's whims. And when the market is less predictable, that matters more. You need to be more cognizant of that factor. And that's definitely an area that I've had to grow in this year for sure.
Oh yeah. I mean, like what you're saying, is spot on. And for me, like what's even worse than that is, let's say you have 100-point, profit on a trade, right? And then you don't take it. It comes back to retest, right? And let's say the retest is successful, right? And then it runs, right? But oftentimes a retest, if we're coming from a zone, it'll pop below. Let's say we're going long, right? It'll wick below, right? Just to get some liquidity, which will take out our stop loss, right? And then it does the move, right? And, I think I spend a lot of my time just making sure that I manage my psychology correctly so I don't get triggered. By the way, that's a pattern that triggers me, right? I know that. So I've been very, very diligent, or I try to be at least, about when I'm in profit, take it, right? Do not let it come back, because that doesn't usually end well for me, right? Yeah.
Which is what I love about scaling. You lock one out at 100 and you're in for 2 contracts, you have 100. Even if that sucker comes all the way back to your entry price, like 100 is decent. That's $500 that can compound. Like, I can call it a day at a $500 win.
Yeah.
Even if, obviously, if you were in for 2 contracts, that's $1,000 at the top. So just being able to be flexible with it and move with her and be careful about what the downside would look like, I think is a growth perspective of just kind of understanding what the market might do, how that might look, and then how you want to deal with the potentials. Yeah.
Right. Good. I totally agree, Becky.
So speaking of how we would manage trades, why don't we throw in a couple strategies that are our very favorites, shall we?
Yeah. And we're not, by the way, as you and I have talked about, we're not in this podcast, not about strategies. But I just wanted to illustrate one that I like, just for purposes of showing that what it is that when we talk about strategies, what is that what we mean, right? Mm-hmm. And it's very personal. I think everybody, in our community has their own, and that's has not their own, but their favorites, right? And mine really is this sort of break structure retest thing. And I'm not going to, there's a million details, but let me just show this, if you don't mind.
Yes, please.
Okay. On a computer. So can you see that, Becky?
I can, yep.
Okay.
So we're showing it on Thinkorswim. Peter and I both trade with Buellanox and TopStep as our funding companies, and we do charting among other platforms on Thinkorswim. So this is a Thinkorswim chart.
Right. So what happened here, is this is yesterday, okay? And what happened here is,
this is the Dow Jones, and this is a 5-minute chart. Am I correct?
This is the 5-minute chart, right? I didn't have very much luck drawing earlier when I was trying to. Nope, it's doing that again. Okay. So okay, if you can see me pointing, that'd be fine. Okay. So what happens is, I drew this green zone here, okay, because this is kind of where the market So this gray line right here is when the market opened, which is 6:30 Pacific time. Okay. If you notice, there's a black box here. Okay, which means that that was where there were sellers pushing it down, and then when the market opened, it started to shoot up. Okay, and what this is the peak here at the just before the market opened, right? When the market shot up, it broke structure. Okay, which means the market goes up and down, up and down, up and down, and when it breaks one of these levels, we call it breaking structure, right? So look to the right. If you see my cursor, okay, there's a level here, right? Uh, and if you see the market going down, well, it broke structure going down here, okay, and then it came back, retested, and then broke structure, and then started to go down. Here, it broke structure going up. And so when it goes up, like I get very excited, right? Because what that means to me is, oh, okay, the market's going up. It broke structure up. It almost always comes back to retest. Okay, so the market, there have been days when it just keeps going. There have been days when either up or down, but those are very unusual. It'll usually come back, retest, look for some liquidity, pull some orders, and then run up. Okay, so what happened yesterday was, I'm going to open this up even a little bit more here, was that the market shot. So it broke structure up, okay? And it broke structure up to this level that we have here. You see this kind of tan level up here that Jermaine had drawn for us, okay, on our charts in the morning. And then you notice when it hit the level, right, it started to react, right, and it came down, okay. And this dark black band, okay, is what we call the one band, okay. And that's one standard deviation, right, from the norm. And the VWAP, which is that green line, wiggly green line going through, right, green or red, is the average, right, is the mean. And then so the +1 is one standard deviation. So what happened was it came down, it hit that one band, and sometimes when the market's moving very aggressively, the one band is a good place for it to retest, right, and then it'll move up. So it did that. It see this candle right here, okay? It dropped to the one band. It started to move up. I went in long, right about here, okay? Right about here, right where the one band was. I put my stop loss below the wick of that candle, expecting it to go back up, okay? And it didn't. It came back, dropped, and it took me out, okay? So that's the one thing about break structure and retest is you're not really quite sure where the retest is going to be, okay? And sometimes, and like we've been experiencing, is very deep retracements, right? And so this green zone that I drew is kind of what we call a demand zone. It's where we know because of the candles that are formed, this is where the buyers are. Okay, so when it broke up, came back down, okay, retested this demand zone where the buyers were and started to move up again, I entered long. Okay, I entered long just as it exited the green zone, and then right up here, right, see this blue zone that I drew? I know that's where the sellers are, right? So if I take a long trade, which means I'm going to buy here at this level and sell up here, right? I want to get out before the sellers start to react, right? And so, I took it from here to here, and that was my long trade, and that was a good trade, right? Here up to here, okay? Although my first one, I got stopped out, right? Because I took the one band trade. The second one was, it worked out well. And, turns out there's some other things on here, but that's break, structure, and retest in the Reader's Digest version. The good thing about the break structure and retest setup is that I'm going to stop sharing here because we don't need that anymore.
Well, leave it up because I'm going to have you show something on that when you're done.
Okay, is that it shows up every day. Yeah. Okay, every day there is some sort of break structure and retest. Okay. And so what it does for me is it keeps me from chasing the markets. Okay, when it's like barreling up or barreling down, because I know it's going to come back and pull back and then continue if it's going to do that. You and I've talked about this before, but I'm like thinking I think it's better for me, and I think it's actually better for most traders not to have 100 setups. Okay, it's better to have a few. Okay. And some people have, I only have one or two. Okay. And they're the ones that work for me. And so I wait for them. Okay. And I know Jermaine, our mentor, has a lot more than I do because he can see the market in some, really kind of freakish ways sometimes, right? That I don't. But
he's a wizard.
So when I stick to one or two, I find that it enhances my consistency, if that makes sense. And I'm not trying to explain all the nuances of break structure retest. I mean, there's people can go on go on YouTube, and I'm sure find better explanations than I've given. But this is the one that I look for every day. You have any thoughts on that, Becky?
Yes, that was excellent. Thank you very much for explaining what you did. And I just was thinking while you were talking about so Peter and I have known each other and trade alongside each other in two communities now for a few years. What's interesting is that we both study very diligently under Jermaine and hear the same education, but we are different, right? Everyone brings their own personality and their back history and their just brain tendencies to their trading style, right? And so Peter and I are different on that. And if I had to pick bears or bulls, what I'm most comfortable trading with, it would be the bears, and then it would be like a mean reversion. And the bulls and we're a work in progress. We're a rocky relationship that I still try with. But in this situation, okay, so this was super funny because it pushed up and open and I was like, nah, I don't like it. It's going fast. It's pushing against, that first 5-minute candle. It already tagged, above the 2 standard deviation band and was pushing. And I saw the target above because it was a weekly level at the base of that orange tan level, right? And I was like, it's probably going to tag that, but I couldn't get in it. But then, Peter, let me tell you, when it printed that first bearish candle off of that supply up there, and I was like, yep, we're going back. And so for you excelled at once you did take that little stop out because the one band didn't hold in the situation. But for me, I was like, we're going back to that demand. We're going back to near VWAP. We're going back to the top of that composite HBA. And so I actually got in short on that second 5-minute bearish candle right around the one band. Yeah. When the second bearish candle opened and started pushing down,
you took a short.
Yes, I took a short, and then I took it down to that green zone. And so this is just the power of this is an example of two traders that are very close, both in friendship and in community and education, that can see it slightly differently and find different opportunities. And so for me, this was a push away from value and a mean reversion back in. And oftentimes, especially in the first hour of New York session, we'll want to recheck the mean of the day or an overnight level. So the VWAP or the support that was holding before we broke out. And so for me on this chart, the easier trade and based just like after 7 a.m., I have to pivot to my children a little bit more. And so time wise, this is the ideal time for me to trade as well. So I grabbed, 100-point short from the center of that second candle down to around the VWAP area and just above my CHVA. And so that was my morning trade on this. But it's so interesting to me how we can study the same thing. And so I just, to anyone who is like, still fumbling and is not sure if they're getting it, and so-and-so said this and they don't really see it that way, like I would encourage you to just take in so much information, but then also make it your own, study, think you see what you see, try it, trade it with low leverage, trade it in sim, back test it, and then figure out how it speaks to you. Because I see the long too. And I was like, I think the short, it fits with the trade that I'm seeing right now with my time frame, and then also with mean reversion, which I've done an episode on mean reversion as well, because truthfully, that's my favorite setup. And I think that I think knowing your strengths, and then there's a saying, and I can't remember at this moment which book it's from, but it's like swing at your pitches. And this is my pitch. I'm like, okay, you push way away from the mean, you hit a weekly supply level that I was watching. And then immediately at that level, like to the tick, there was a response. And so for me, I'm like, I want to be in on that response, and I want to take it to a common retest site based on my studying, which is VWAP. And so, swing at your swings. And if something looks funny, exercise caution, I think, right?
Yes. So if I could jump a little bit and just echo what you have said, because this is super important too, right? It's the idea of waiting for our setups, right? Because my setup, that was your setup, right? Mm-hmm. And I knew my setup was lower, and I'm going to do something. I'm going to quote Warren Buffett, okay? And if Warren Buffett knew that I was quoting him for day trading, he'd probably come over and just slap me on the head, right? But I got a bunch of sayings that I keep up on my computer, many from Warren Buffett and his letters. as you know, he's not a day trader, right? And
Yes.
one of his more interesting, he has many interesting, but one that I really like is the stock market is designed to transfer money from the active to the patient. Okay. And that can't, no truer statement has ever been made in day trading. You know what I mean? So I'm waiting. So here you are, right? You're taking this short. I'm waiting it now for it to come back to this green zone here, right? Right. But if I didn't, I just just click here, click. I would have been in big trouble, right?
Yeah.
You know
You
what
were
I mean?
patient for your setup. You respected what you wanted to see to take a trade, and then you executed when it showed you what you needed to see. Like,
Right, right. And what I did on this trade was actually, my target was much higher than where I got out. But when I saw that there were sellers there, right, I moved my stop loss, right? Because like you were saying earlier, like I actually want to capture, that part of the gain that I had. I didn't want it to come down and then take me. It would have done that, by the way. I could have lost everything, right?
well,
And here's the thing, when it comes down, as you know, it comes down fast, right?
and that bodes to the saying that we both love is have peace with your peace, because
Yeah. Yeah.
like that was like 150 points from that VWAP to that supply zone, and it's like, if you don't lock that in and respect the fact that New York session has shown that there are sellers present there, you're going to have to fully be accepting of that sucker coming all the way back on you, because, it's sick when we can take these huge moves, but it's
Right.
also sick when we get paid. And I get paid by like taking a good chunk out of a highly reliable move that I understood and not always catching the tip to tip. But, locking in green every day, it adds up.
That's right. Yeah, that's right. That's right.
Yeah. You can throw the screen share off if you want.
Okay.
We might end up, let us know. Give me some feedback. Give me some comments. Do you guys enjoy Peter and I talking about how we see the market and where we might and might not get in on trades? We definitely would take your feedback, because Peter and I, talk weekly and talk daily in our community. And so we're, up for doing some of this if you find value in it. If it speaks to you, what do you guys like to trade? Because you brought up a good comment about how many setups do people have, right? And people who've been trading maybe a decade, such as Jermaine, I mean, he's developed quite a grandiose view of the market and has different systems. But for me, I would definitely say I have, 3 or 4 maybe that I can spot on the earlier side and execute on and have a pretty good understanding of what to expect in terms of risk and profitability and how to scale them. But then there's some days when I just don't understand the market. And so I do. Tell me a little bit more about you. You like to dial it into just a couple strategies, right?
Yeah, I think this break structure retest is the one that works for me the best. There's the rhythm trade, but the rhythm trade is a break structure retest trade, right?
Mm-hmm.
Okay.
Break structure and continuation.
Fundamentally is that. Yeah. And, I try and stick to what works. I try and stick to what I know. It works for me. Let's put it that way. And when I do that, I find that I can be consistent. And if not, I can be all over the place, right? You know what I mean?
And I think if I'm not trading a specific setup that did something at a level that I was looking for, and this is how I trade that setup, it just gets more highly variable, highly quickly, rapidly, right? Because if I'm more like stabbing in the dark where I think this might happen and trying to trade on intuition, and that's a little bit more not as solid and reliable. And so then I can get into some trouble where I'm like, well, shit, that didn't work. I want to try the opposite direction, or like start chasing and stuff. And that is the recipe for a disaster.
It's a recipe
for my
disaster.
day.
Right.
Yeah.
And the good thing about these kind of setup things, right, for me is that it actually keeps me, so one thing we have to do is, we can't trade emotionally, right? We have to trade our setups, right? And what I've just said is hard, right? But it is kind of it is kind of why we're here, right? And it's just me. I'm very much still a work in progress, right?
Yeah.
And these setups that we have, looking for things that work for us, they are one way to keep us from taking emotional trades.
Yeah. Well, and that's why when we talk about strategy and the Market Mamas podcast, there hasn't been an overwhelming amount of strategy. And it's not because I don't study strategy every single day and I have notes upon notes upon notes on strategies that I like and why and what it looks like. And I journal on all my trades. And so I love the technical analysis and studying. But for me, part of my breakthrough and the fact that I am getting paid is not so much the technical knowledge that I have amassed, but more so the personal control that I am continuing to develop and give attention to. Because, like you just said, I mean, it's controlling the emotional and psychological part of our day that really is the game changer. The ability to say, I'm not trading if I don't see my setup, and I am going to honor my risk, even though I really want to be right and I don't want you to stop me out. Like, that's not really wanting to win is not a reason. It's not a system for managing your risk, right? You have to be systematic and respect it. But that doesn't come intuitively because we're humans. We're not robots. And so for me, like Market Mamas has, over 100 episodes about the psychology of what it looks like and feels like and what tools we have used in order to get ourselves to where we are, because that seems to me, and from every trader that I know, to be the kicker and what makes the game changer, right? Strategy is critical, but you will never get there with strategy alone as a human being trading.
That's what I think, beginner traders, when they start, they're looking for the optimal trading strategies. If I only could find out the one that worked, right? And there's many, many, many traders who say, man, in some ways it doesn't matter, right? Like pick one, right? And then it's probabilistic, right? And then manage your risk, right? That's what I just said is so easy to say.
Yeah.
Very, very, very hard to do. Right.
Yeah. And I think, having trading setups, like to the beginning trader that says, like, I want to find the one guy who has the strategy that I need to learn that and I need to do that every day and that will make me profitable. I mean, I wish them the best, truly, but I think that is a recipe for failure because, sorry, I'm going to say it, but like, a strategy is only as good as you understand what's behind it. Same thing as an indicator, like what is formulating that idea? What is causing that candle pattern? What is the buyers and sellers? Like what is the market context and the read of the bigger picture doing? And so, and I think that to understand market context and how Miss Market moves and why is the fundamental core to becoming a successful trader. That is what causes you to have 1 to 4 good trading setups that you can rely on and spot early enough to get a good entry on and fully capitalize on. That comes from having a broader understanding, not just if a 5-minute candle looks like this, I go long, or vice versa, because that is almost like, it's just, there's some naiveness to that that I think long term is not going to be super sustainable unless you can start with that, but then build beyond that to support it so you have a better understanding of the why behind something. Because that for me is so much more powerful to my trades, and it helps me hold longer and take added leverage because I feel like I can see it and feel and understand it. And so that's been massive for me in being able to select what strategy I want to use on a given day, because I'm getting better at taking in and understanding that market context. And so then I dial it in more effectively.
Right. Exactly. Thank you.
Okay, that was really good information about strategy, you guys. I want to know more about how you trade, what your experience is, what you like. Are you bears? Are you bulls? Are you mean reversion? Like, give us some more feedback and then ask us any questions you have. And we are totally willing to answer you guys and continue the conversation. And Peter, thank you so much for being my guest today on Market Mamas. Again, you are an incredible wealth of knowledge and always so open to helping people within our community and now in the broader world. So thank you so much for your time, Peter.
You're very welcome, Becky. Thank you for having me again. That was fun.
Yeah, it was really fun. All right, take care, everyone.